I will summarize all profitable trading into two major conditions. Number one, consolidations. Number two, breakouts. Once you figure out which market conditions that you're in, you will undoubtedly profit. The hard part, of course, is knowing which market type you're in. If you use breakout strategies during a consolidating market, you will tap SLs 9 out of 10 times. And if you use consolidating strategies during a breakout, then you will keep wondering why your key levels never gets respected. So in this video, I give a raw breakdown on how to determine market conditions, plus the key points of interest involved in printing during all the conditions right here. So enjoy. Stream alone, I want to focus on one main thing: market direction. Alright, I know I always say this on stream, ladies and gentlemen. The market goes up or goes down. Correct? If yes, type yes in the chat, let me know. Absolutely. The market always go up, go down. Then what happens if you get stuck in a range? You don't know what to do. I know a lot of you guys here as beginners struggle with that. The sideways movement. Okay, so these are the three main kind of market direction that the market here can create for you. All right, you have your uptrend. Okay, let me just clear the charts right here, like this. Let's do some drawing. All right, the market here can continue creating very aggressive push towards the upside, creating higher highs and higher lows. Or the market here can give us a push lower, creating lower highs and lower lows. Or price can range about. Now, these are your market conditions that we face every single day, right? Different sessions have different market conditions, right? Asian session can be super aggressive, and then London session ranges, and then New York session pushes again, right? But like I mentioned, we need to know how to identify these kinds of structure. Okay, so pay attention. For uptrend, very, very straightforward. You want to see higher highs keep getting broken. You want to see price create pushes towards the upside, breaking past the most recent high, brand new high, good. Retrace, respect the low, continue high, higher highs, higher lows. This is the characteristics of an uptrend. If you're looking for sells, then of course you must make sure that your chart is starting to look like this, creating lows, highs, lower lows, lower highs, lower lows, lower highs, and then push lower. Now, very clear cut. It's very clean. We see price moving with volume for these two directions. Now, for the range itself, this is where the confusion comes in. How do we exactly identify a range? All right, because range can be quite subjective, right? Some of y'all look for a 10 pip range, some look for a 100 pip range, some look for a 200 pip range. Personally, what I have been doing over the past 2 years plus live on the stream, each time I see a range, this is how I identify it. Take this down. You know what? Let me write it down for you guys here. Range conditions. Number one, what we're gonna have is no clear 1 hour structure breaks. That means the market here pushes up, wicks. Pushes down, wicks. When that happens, usually on the lower time frame, you're already looking at a range. Okay, so I'm gonna write this down here. No 1 hour structure breaks with body candle close. This is your first condition. Alright, so if you hop onto the Asian session, you see 1 hour time frame, not breaking up, not breaking down. Then you know, okay, volume is a bit lower, we are in a range. Number two, you see session highs and session lows being respected. Okay, session highs and lows being respected. Now, this is a key point. As you know it, we use the strategy sweep of liquidity. Right? We understand that during a session itself, for example, the morning session, Asian session, That kind of sets the tone for the day. If the market here has created a swing high during Asian, swing low during Asian, and we stay within that, more than likely, we are going to see price bounce around that area. And that's how we have a range. If price cannot break out of that range, then more than likely, price is trying to figure out where it wants to go. As I mentioned on the stream earlier on as well, if we don't see a body candle close below the Asian low, which is actually sitting right here, there's going to be a very good chance we stay in this range. Alright? Is everybody clear up to this point? If you are not sure of the Asian session highs and lows, what time frame, plus what specific time periods to mark it out, take this down. I'm going to say it verbally. Asian session happens from 8 to 12 p.m. GMT plus 8. Write that down. I repeat, 8 to 12 p.m. GMT plus 8. London session, kill zones, where you mark out the London high and London low. 2 p.m. to 5 p.m. GMT plus 8. Alright, and then there comes New York, right? This one, 7 to 10 p.m. GMT plus 8. This is where I like to mark my highs and lows for my New York session. Is that clear? Okay, 7 to 10. Very good. You guys here are already writing it down in the chat. Beautiful. Alright, so if you see price stuck within that range of the previous session, then you know the market here isn't moving. The market here is trying to find out, can we break past that low or can we break past that high? So that's the second thing. Third thing, right? You don't want to use 1 hour for whatever reason, right? You're looking for scalps and scalps only. One thing that I found out that has been very, very clear is 15-minute support and resistance. Yeah, repeat this, Let me write it down here. 15-minute support, resistance. Now, what do I mean by support and resistance zones? Right? You guys here already know it. Each and every single concept that we use is pretty much very accurate to the exact pipette. 0.1 pip. It's that exact. But for support and resistance, all you really have is a bunch of wicks around the same area. Right? It's very subjective. So let me give you an example of what that looks like. Right? Let me give you an example right here. London session. Clear. Take a look. The market here on the 15-minute time frame creates this. This is our support, our resistance. Resistance. Price wicks it multiple different times, no clear break towards the upside. Same thing for the bottom. Multiple different taps. To me, as long as I see 2 to 3 taps already, and price cannot break through the area, I'm going to automatically assume that we are ranging in that specific time frame. Clear. 15-minute here, if you start to see price ranging, then you know. You're either number 1, look to play the range, or number 2, you look to play the break out of the range. Okay, let's look for another example here where we can look for the ranges. Clear. Right over here. London session yesterday. Market here tried to push up higher, correct? The market here gave us multiple different tests. Coming into London. Here. Again. Another range. We have our resistance and our support. During this price action, you can see You have a high, lower low. Price came super close to it, created equal highs. It's not clear that the market wants to break out. There's no volume. Alright, same thing. The night before, what do you have? This one should be super obvious, right? Am I right or not, Premier? Super obvious that this is a support level. This right here, resistance level. Is this clear? If it is, type G in the chat, let me know. I hope you guys are taking down notes. So like I mentioned, these are the conditions to target for ranges, or how you identify ranges for that matter. These are the three things I look at. Do I need all three to be fulfilled? No. Either one is fine. Okay, either one is fine. So this is range. Now, question. How do you capitalize on ranges? How do you look to play the range? How do you think we're able to print? Especially since like last Friday, a 50 pip move. Any guesses, chat? Let me know. I see some answers. SOL, sweeps of liquidity. Cool. That's the strategy on the 1 hour time frame where we're looking for the session highs and lows. Looking for a sweep of that. Give us a 1 or a 5 minute bullish change of character or bearish change of character for that reversal trade. That's fair. Cool. Breakout and retest, not really the case. Some say reject of the support or resistance. Well, it needs to be clearer. You need to know the exact criteria to be looking at. Now, personally for me, when I look to trade ranges, my eyes is laser focused on one thing. Untested order blocks. I repeat, untested order blocks. Why do I look for untested order blocks? Remember, when a move here is created, for example, if you're creating a bearish move, price creates a push lower, like this. Lower high, lower low. Breaks past structure. Okay, we have a structure break. Now, assuming that this is the resistance, like this, and you have a support, like this. Understanding that we are in a range means that the resistance and support will be tested at many different types. So if that's the case, and you have an order block like this, OB, am I expecting the extreme point of interest to be tested or the most recent one? Type extreme or recent. Which one? Are we looking for price to give us a retest of the extreme or the recent price action? This is where there's a mistake. I see a lot of you guys here typing recent. Bigger balls, you got it right. Extreme, because you're ranging. You want to look to test the far end of the range. You do not look at the recent price action. Because imagine, price action here creates a push like this, right? Price push up, push down, creates a change of character, or you know what? A continuation B West, creating a break a bearish order block right here. And S is pushing lower. While in this range, price creates a fair value gap. If a fair value gap here is created at the bottom end of the range, do you realistically want to sell at the bottom end of the range to look for continuation sells? it's definitely going to be a bit risky because the support level is right there and we haven't even confirmed the body can close underneath. So normally, if you do see some reactions at this point, then this is where the market is kind of trapped. It's trapping people that are looking for continuation sells here. Usually what happens is price pushes up against the fair value gap, tests the extreme, and continue dumping. Does this make sense? If you want to play the range, then you really look to play the end of the range. Because that's the characteristics of a ranging market. It will look to play ping pong up and down, up and down, up and down. Alright, this is a gem that you guys need to understand. Always take advantage of the extreme end of the range when you are in a ranging market condition. Now, I see a question here. So why do we care about OB? Good question. Because order blocks are found at the extreme ends of the swing highs and lows. Clear example. Let's take a look. Right over here. You see price action here created a lower high, lower low. Resistance I've drawn here. OB is where? Is it just right here? Is the OB at the resistance? The last candle that created the highest point before dumping lower and creating a break of structure lower? Yes. Okay. I see someone here that has voiced a concern. So when you say extreme, what does it mean? I still don't get it. No problem. I simplify it even more for you. End of that trading range. So if you have a bearish move lower like this, swing high, swing low. You don't look for the most recent 1 minute fair value gap right here at the bottom. You zoom out, you look. Where is the end of that range? The one that's furthest away from the bottom. Here, the bearish OP. Does this make sense? Fastly? Need to make sure that every single one of these here are crystal clear on how to identify that. Now, I'm going to give you an extra tool to help you figure that out. Listen up very carefully. Okay, listen, Now, let's go back to this drawing right here. We know that we have a resistance and support. Very simple. Draw a fib. Ta-da. Anything above the 50% is a good area to look for sells because you're looking to play the range. Ping pong. This above the range of the 0.5 level, the equilibrium, is going to be a premium zone to sell. Think about it. Let's just say you're looking to sell. Would you rather sell at the market price 2,000 or would you sell at 2,010? $10 more expensive for you to sell. Profit $10 more. Per ounce of gold you sell. You prefer to sell at higher prices. Right here. Okay, so anything above the 0.5 level in the range is the premium zone. Anything below is going to be a discount zone. Cheaper to buy, right? And this is perfect time because we are looking to play within the range. Is that clear? This is exactly what I mean. When you play the range, you look for the extreme ends. And the Fibonacci retracement tool here will help you out. Just mark it out, remove all other levels, and there you have it. Like this. I remove all other levels. Just have 0, 0.5, 1. If that's what you want to use, you can. That's it. That's all you realistically need to have. So let me just recap. You have resistance, you have support. You have identified on a 15-minute time frame. Or perhaps maybe you have a session high and session low. Respected price playing ping pong within the area. Or you have no 1 hour structure, breaks with a body candle close. This is what you can do. At the end of the range, on top, look for sells. At the bottom, look for buys. Using order blocks. Is that clear? Crystal clear? Type W in the chat, let me know. Clear? Very good. Okay, so this is for the ranging market condition. For trending market condition, I believe you guys here are very familiar, but I will still go through with you all one more time. Okay, so now, take a screenshot if you need to, so that you understand. Alright, perhaps maybe write down some notes on top of that. Alright, give you all 5 seconds. 5, 4, 3, 2, 1. Good. Now, let's end it off with the trending market conditions. How do you treat them? Simple lah, huh? For trending market conditions, it's very, very simple. You want to see, let me just clear all of this here. Okay, now, for the trending market conditions, what you want to see is for price to constantly breaking structure in the direction that is trending. So if it's a bullish structure, you want to see price create higher highs and higher lows. So how do you trade bullish structure? Now, whenever you create a bullish structure, you are going to create BOS. Now, each time you see a BOS, this is where you be very attentive to whether it creates a body candle close or not. If price action here does not create a body candle close, then more than likely we are looking for a deeper pullback. If it does, then we are expecting price to give us the most recent point of interest retest and continue higher, right? Because aggressive, right? Volume is stepping in, price action here is starting to give you the volume to push price further. So you will use whatever most recent point of interest that is aligned with the direction to continue looking for buys. One key example, let's just take a look, yesterday. All right, since yesterday we've been talking about sells. So for sells, we're looking for lower highs and lower lows. Just clearly take a look at the 4 hour time frame right here. Okay, let's just shift all this to the side for now. 1 hour time frame, what do you see? Price since yesterday. Change character. Lower high, lower low. Lower high, lower low. Wick past the high, okay, cool. A little bit of a range here. Like I mentioned, no body candle close. Range lah, right? Same thing. Range lah, right? We have a range. Type range in the chat if you see this. No body candle closes. Let me know. Price couldn't break above, price couldn't break below. But the moment we break below, showing us that we break out of the range and we choose a direction, what did price do? It retested that exact level where it broke out of and continued dumping, creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And normally, when we are in a trending market, instead of looking for OBs like we do in the range, we look for fair value gaps. Bam. Why? Fair value gaps is the first sign of market starting to show volume. You normally only see fair value gaps in trending markets, where price is pushing aggressively in one direction. Normally in a range, do you see fair value gaps? No, you see a ton of wicks, because price is filling every single order it can, even on the seconds chart. Coming up, coming down, coming up, coming down, to find any ounce of orders to make price move. Alright? But when you have a trending market, the market here is pushing so fast that it leaves orders behind, or at least people couldn't get into the position, so they set limit orders. Same thing for sells. If price dumps so aggressively, they're not looking to sell at the bottom. They're going to be selling where there's a gap, right here. Same thing. Price came all the way down. Cool. We have a lower high, lower low. Trending market tells us that, cool, we want to see this low here break. So if I expect price to continue dumping, I look for the most recent point of interest. Once again, another fair value gap. Surprise, surprise. Price taps into it, respects it, dumps, breaks past this low. No body candle close. Cool. So we might have a range from the high here to the low here. But understanding how price has created lower highs and lower lows and lower highs and lower lows, you want to capitalize on sells? Possible. To look for price to continue lower? Sure. Most recent fair value gap. Is this clear? The exact same is true for a bullish market. Okay, I see a question, a very good question for that matter. This analysis is best to do it in the 1 hour, or should we do it on the 1 hour, 50 minute and the 5 minutes? Now, you know what my answer is most probably going to be. Always do multi-time frame analysis. So the latter is correct. Alright, you do not want to be too focused on one singular time frame and leave the rest out. Imagine if you are looking at one specific time frame, it says bullish, but all other time frames are bearish. How? Gonna fuck lah. That's why multi-time frame analysis is so key, and that's why I do it every single stream. Alright? Very clear. So now, you guys here already know. I've given you a lot of gems here on this stream alone. Number one, ranging markets versus trending markets. Trending markets is clear. Two directions. Up, down. Ranging market, one, stays in the range. That's what we went through. Number two, how to tackle a ranging market condition. Play within the range. Identify your support and resistance levels. On the 15-minute time frame, as I mentioned. Okay, so let me just repeat the criteria for your range, so that you know if you didn't get the screenshot earlier on. Number one, 15-minute clear support resistance zones. Number two, 1 hour no structure breaks. Number three, session higher and lows being respected. You see any one of these three, you know that you are currently ranging, and you look to play within the range. What is the added tool that we gave you all to capitalize on this, telling you where is a better price to sell or buy? Use the FIP tool. Have the 0.5 marked out. Anything above that is a premium zone to sell. Anything below that is a discount zone to buy. Then what is the point of interest that we use? Do we use fair value gaps? No, we use order blocks. And that's how you manage to take advantage of a ranging market. That is for ranging market. Now, what about trending market? Just as I mentioned, always look for structure breaks with body candle closes. Look for fair value gaps to hold. Clear example, what I've done just right here. Price gave us a range, we wait. Okay, break out of it with a body candle close. Good. Fair value gap, this is where you look for sells. Price continues lower, creating lower highs, lower lows, lower highs, lower lows. Cool. Price period, the most recent 1 hour fair value gap. It's trending, it's strong, it's aggressive. The chances of price coming all the way back up towards this level here is low. So I watched this fair value gap, which is the most recent one, to look for sells. And price did do just that, creating another lower low. Same thing, you want to look for continuation sells. Pro trend, look for fair value gaps to be respected. Lower time confirmations, sell. Is that clear, ladies and gentlemen? I hope you guys understand now how to take advantage of all market conditions. Bullish, bearish, ranging. You now have the tools to go ahead and destroy the markets. Go and backtest it yourself if you need to. You see it work. At least work 89.6% of the time, right? But yes, this is how I view the markets every single day, and that's why I have such a high win rate. Alright? Use it, backtest it, implement it, and execute on it.